And there it is, the top of A1. Investors brace for slowdown. Friday, boy, Friday really was sort of a real splash of cold water for anybody who was hoping to resume the bull market. What's going on globally? What does it mean for investors? Jonathan Cheng is the man who's going to tell us that, with the Dow down 22 points. Right. Kind of a squirrely morning for the stock market, right?
Right?
Futures were down tremendously. Then they came back. Now you can see just kind of, a little bit lower, but not a big move here.
Right, and the big question this week, there's not a lot of economic data on the calendar, but people are, of course, going to be watching Europe and what happens there. And I think really what we saw on Friday, which which was what we were writing about,
still trying to figure out and mull over and respond to.
Right. And of course, it's not just Greece. We see a real banking crisis start to develop here in Spain. And I think what was really scary for a lot of people was to see that the U.S., which had been a bit of a bastion in the midst of what we're seeing in Europe and even in the emerging markets.
We had hoped it had been a bastion.
Clearly, that's now in question as well.
After Friday's report.
That's right. After Friday's jobs report, 69,000 jobs. Less than half of what the consensus was. And in China, of course, on Friday, we also got bad PMI numbers over there. The government there says they're not going to step in and make a big splash like they did back in 2008, 2009, which all raises the question, what sort of a summer is this going to be? And I think the answer is it's going to be a pretty rocky
summer. Yeah, I mean, you're right, because now you can really draw a picture of all the world's largest economies, and you can see they are slowing down pretty much in concert. And this week, you can see a very good deja vu graph there. You can see the peak and the everything going down. This week you're going to get a rate decision out of the ECB. You have Ben Bernanke testifying before Congress on Wednesday. You already talked about the Chinese saying they're not going to do anything big, but people are still talking about them doing something. You look at global leadership, and let's not kid ourselves, there is not a good global leader on either side of the Atlantic, certainly. Where do investors look now? I'll tell you where they're looking. My answer is they're looking to the bond market. But where do investors look now for guidance?
Well, for guidance, I mean, I think right now it is a bit of a holding pattern. I mean, you mentioned the events that are coming up this week. Those are just appetizers, basically, for June 17th. That's a Greece election. June 19th, 20th, that's the Fed and their potential QE3 or more easing.
Right, so this is the rate-setting meeting. We know rates are zero. They're not going to do anything. But will they announce a new program?
And June 28th, 29th, that's when the EU meets again. Those are the real ones. So,
those are the real ones,
ahead of that, I don't know that we're going to see too much in the way of indicators.
That's 3 weeks away. At the earliest, John, that's 3 weeks away.
Right, and I think June is going to be a funny period. And keep in mind that none of these events we could really have expected to be this dramatic even, say 4 or 5 weeks ago. So in a matter of 3 weeks, who knows where we are again. I don't want to... You
don't want to guess?
I don't want to.
You don't want to go there?
Out on a limb
you got to go there. You have to go there. If you're an investor, you have to go there. You have to have a plan for at least the next 3 weeks.
That's true.
And look, the plan is buy bonds, buy safety, right? You look at the 10-year. The 10-year is still under 1.5, around 1.45, 4446. Look at the markets. Let's talk about the markets for a second. Give me the charts here. We're going to pull these up. You can see not a good morning, down 30. We had the factory orders at 10 a.m. for the U.S., and they were for April, a little bit stale. But again, not very good numbers. Not anything bucking the trend of the data recently.
That's right.
NASDAQ up a couple of points.
Maybe tech. Down. Maybe that's one place to hide, at least today.
Tech, yeah, right. Let's talk about the S&P for a second. The S&P at 1274, 1275. How critical are the levels on the S&P right now?
Well, right now, I mean, technical levels, of course, are important, but I mean, I think at this point, it's got to be the headlines that are playing more of a role here, because we've busted through a lot of these levels on some of these big headline days, and I think really that's what people are watching now, particularly with the amount of money coming out of the Spanish banks and whether or not they're going to be able to do anything to stop that, because it's a confidence issue, of course, and that's...
Talk about, we don't talk about it enough here, but I just want to quickly mention oil. Oil has been getting shellacked, and it's down again today. Keep an eye on that one. That's good, actually. It's good for you and I. Well, do you have a car?
I don't have a car.
You don't have a car? I have a car. Oh, it's up 0.3%. Little rebound. But look at that. 83.50. It was under 82 this morning. I mean, that is quite a ride.
We were like at 110 or so.
Exactly. Quite a ride in the oil market.
This year, so.
We have to leave it there. John Cheng, I'll let you go.